So is the current real estate market seller's market or buyer's market? Based on the absorption rate, how many homes that get sold within a month, how many listings are available based on 1 month absorption rate. And then if it's near like 6 months, they call it the like neutral market. And if it's less than 6 months, they call it the seller's market. If it's more than 6 months, they used to call it the buyer's market. Now, that is based on the real estate books. Before the internet, they used to print listings on books. Each brokerage had that. That's why you had to join a brokerage to be able to see the listings. That's my understanding. That was before I started in the real estate business in 2008. But now with the internet, that formula is antiquated in my opinion, because most of the listings get exposed in the first month, and the sellers are going to think about price adjustment after about month and a half. That's about 30 or 45 days mark. And I'm going to share with you the days on the market, the median days on the market by 8 city that I track, and I'll give you my own opinion on what it will feel like for the consumers. Because ultimately, if the seller's market means the seller should feel like they have the control. They can ask for multiple offers and they get multiple offers, and sometimes like counter or ignore lower offers. When it's buyer's market, buyers should have the control, meaning they have more listings to view. They don't have to make the full price offer, negotiate on the price and terms. So let's dive into that. And this is October 2024. The 8 city housing market index that I make right now, the median list price is $938,538. So it's like low 900, mid 900-ish. It went down from about 1.3 million, I believe, about 3 months ago. And today, let's talk about the median days on the market. So I'm gonna go to Portland market, line 7. Portland market median days on the market is 63 days. And based on my market knowledge that I have, how many listings kind of sit on the market for more than a month, and yet buyers' activity is kind of low, even with the mortgage interest rate fluctuating. Right now, I see in my neighborhood things aren't moving as fast. So in 63 median days on the market means some homes are gonna sell within the first week. Some homes are gonna sit for like 4 months. And when it becomes like 63 days, in my opinion, it becomes more toward the buyer's market, meaning buyers have more listings to see. They feel like they can make lower offers, maybe ask for some concessions. So in my opinion, right now, Portland feels like buyer's market, even though it contradicts to traditional buyer's market and seller's market definition. If you look at Austin, Texas, 84 days. That's almost like 9 days, right? That's like 3 months. That's very, very, in my opinion, buyer's market. Same thing with Houston, 70 days, buyer's market. Miami, 63 days, buyer's market. Seattle, 42 days, slightly toward the seller's market. San Francisco, interestingly enough, it's 21 days, meaning it's very seller's market. The price has come down quite a bit, but the demand is kind of going up a bit, I believe. The annual appreciation that as far as I can track, now this is compared to 2023 and current. So the current sale price per square foot is $937, but last year it was $969. So that's 3.3% depreciated. However, compared to the last summer, about 4 months ago or 5 months ago, the San Francisco had the double-digit depreciation. So comparing to that, I think the market is normalizing a bit. Market is kind of like making an even point. It's not depreciating as fast as it was, which means that maybe it's getting close to hitting the bottom. So 3.3% depreciating year over year in October of 2024, and yet the median days on the market is 21 days. So my assumption is that some homes, some well-priced homes or decent homes are potentially getting multiple offers in that market, in my opinion. And for example, San Diego, similar story, 28 median days on the market. This is going to feel like seller's market, and it only appreciates 2.2%. The other thing to note is that Miami is not slowing down, it seems. Right now it's getting the Hurricane Milton, but the pricing wise, it's still so hot, 14.3% appreciated compared to a year ago. However, median days on the market is 63 days, so it's going to feel a little bit slow. So yeah, I mean, to kind of sum up my today's talking point of seller's market and buyer's market, the 6 months, the inventory, it's outdated in my opinion. I think we need to both look at that one, but more toward the days on the market on the heavier data point, because that's going to be the one that the sellers and home buyers are going to feel more closely. Let's lastly add on to this one. I like to see this one, sale price per square foot. So median sale price per square foot is going to be a good indicator, because it doesn't matter what kind of listings are listed, it's going to give overall temperature of the pricing. So a city average is, it's almost the same as last year. So in Austin, in 2024, the darker bar is slightly depreciated. And as you can see, I'm basically comparing Austin is negative 4.6% compared to last year. Houston, same way, slightly depreciated than last year. Miami, 14.3% as we saw. Seattle depreciated a little bit. Portland is almost same as last year. San Francisco depreciated. Los Angeles and San Diego appreciated compared to last year. And I do track the median rent. I'll just touch on that briefly. Just to give you an overview, median rent, the yellow bar, Houston is going to be the cheapest to rent compared to 7 other cities. The next is Austin, Portland, Miami, and Seattle is almost the same. And then San Diego, San Francisco, and Los Angeles. Now, one thing to keep an eye on this one is that, for example, Austin, Texas price is lower. Let me say it the other way. The price is higher. Let me double check on this. Right. So this is sale price per square foot. Austin price is higher than Portland right now, but Austin's rental price is lower than Portland's rental price. So to me, that tells me the Portland price either has to go up to keep up with the rental price, or Austin's the rental price needs to come down to meet the lower purchase price range. Same kind of sort of opposite effect is happening on San Francisco and Los Angeles. For example, Los Angeles, the purchase price is lower than the rental price. San Francisco's rental price is lower than the purchase price. So to me, this is like an uneven market. It's not one-to-one, apple-to-apple comparison, but one thing to keep an eye on is that eventually the rental market and purchase market evens out. What I mean by that is, if it has, let's say, median rent of $2,000, median sale price should be somewhat according to that rental price. So if you see in any markets the rental price is going down, that's the first indicator that the purchase price may come down. It has to come down, because the purchase price is driven by the investor's pricing, which is the bottom price, and then the retail home buyer's price is more like a median price. However, one other side note is that if you're thinking about investing a property, I wouldn't buy anything above median price in any market because of the rental bottom line indicator. So let's see, that's all I have for today. Thanks for watching Shawn Realty podcast. This one I wanted to give you what's going on in a city market index, as well as seller's market or the buyer's market. The traditional indicator is kind of antiquated. So kind of let's dive into, let's figure out what that might be. I think it's days on the market, to be honest with you. But I'll do some more research, more thinking, and get back to you on the next video. Maybe you can add any comment on that. But thanks for watching. Please hit the like button and subscribe. That's going to help my channel greatly. I appreciate for your support. I wish you a great day.